Let's bring in George Tsilis, senior markets correspondent here. We're talking Uber, George, and I kind of wanted to hit this one. Lyft got by 3 upgrades this morning. They had their investor day yesterday, kind of reconfirmed some of their growth estimates for the next few years. But Uber, since that last earnings report, got hit on that, but it was in a downtrend prior to that. It traded $82 in March. And all the way down towards $60, but seen a little bit of a reprieve this week. George, give me your take here on Uber.
Yeah, so, I mean, I think you bring up a good point. First off, I mean, you look at the price action prior to the earnings release back on May, it started to drift lower, and I can tell you why, what I think the reason why is. But if you look at Uber, I think what's happening here from the business standpoint is that, one, the composition of their business is changing a little bit. So if you look at the total revenues as a percent of their segment, ideally speaking, the mobility segment business was about 75% of sales. Now it's only about 56%, but they're picking up more deliveries from a food standpoint, and that's becoming a bit more of a larger component of their business. If you look at the gross bookings last quarter compared to the previous year, from a growth standpoint, it was around 19%. Previous year, it was 18%. This is the growth rate or the rate of change. So that was higher. But if you look at the mobility segment from a gross booking standpoint, it grew 30% year over year, but that was down from 39% if you look at Q1 of 2023 compared to the previous year. But at the same time, if you look at the food delivery gross bookings, they were higher by 18% versus 8% year over year comparisons for the previous year. So I think what we actually saw was a change in the composition. Gross bookings were higher. They're nearly 20%, but their mobility revenues, which is still their core revenue business, but it's now shrinking as a percent of total sales down to 56% from about 75% just going back a couple of years. And I think there's been an adjustment because of that from a stock price standpoint. But looking at Lyft, which reaffirmed and actually committed towards 2027 price targets, I'm looking at Uber. Going into 2025 only, they're expecting around $2.09 a share in earnings, and for this year, 86 cents. So they're expecting, in the next 4 quarters, 68% earnings growth. And now, if you look at the forward multiple for 2024's earnings, around 77 times, it's trading at slightly higher than 1 times its forward 4-quarter EBITDA growth. So I think what we've actually seen here is sort of a recalibration of the price relative to the earnings growth, associated with some slowing growth rates in gross bookings for mobility, but it's been offset by increasing gross bookings in their food delivery business.
Yeah, George, delivery and freight seem to be gaining on mobility, which is how they made their bones. How is this, George? Couple things. I have like 8 questions, George. How much time you got, actually? So when you look at this company, how are they going to continue to grow? Is that the thing? And let's have the autonomous driving question, George. Does it hurt this company, or does it actually help this company?
Well, look, it all depends. If you think about who's bearing the cost of the capital in terms of the car, it's the driver. So if you go autonomous, Uber will have to bear the cost of the car itself. That might be a long-term strategy, but initially it may necessarily be quite expensive for them to make that transition. But I think if they do move in that direction, which I'm sure they will eventually, from a robotaxi or autonomous driving standpoint, there'll be a whole fleet of vehicles that essentially will be utilized for lease. In other words, it'll be a little more of a real-time usability for vehicles as sort of a robotaxi fleet. So I think in the long run, it's going to be fantastic for Uber. But I think, you also have to think about food delivery. If there's no driver to help deliver the food to the door, who's going to do that? So these are just questions I thought about, or things I thought about, as they eventually will move towards autonomous driving. How will that impact their freight business? But how, again, will autonomous delivery help their freight business versus some of the challenges in the delivery business?
Yeah, I mean, a lot of people didn't expect them to become profitable until there was driverless cars. So they sped that up, a lot of cost-cutting measures. But, George, you mentioned last quarter, stock falling basically on those charges that they had to take, $720 million charge tied to equity investments in other companies. I mean, that's ridiculous, George, from a company like this. on one hand, but at the same time, hey, it's almost like a rip the Band-Aid off of scenario. Is that it, or is there going to be more of these?
No, I think it was a rip the Band-Aid off scenario. I think it was their global business. They took a charge off because they faced some challenges, not able to operate in certain regions of the world. So I think they did the right thing. They came clean with it. Obviously, the stock made an adjustment. As I said, it started to roll over prior to earnings. You can see how the market sort of picked up on it. But now what I'm doing is I'm really looking at, how does the pure earnings growth on an adjusted basis look going forward in 25? And as I alluded to, 89 cents for 2024, going all the way to $2.10 in 2025. So, just looking at that math, it's a pretty significant increase in earnings. And now, it's trading around 77 times, which is still expensive, but maybe not relative to that earnings growth profile.
All right, great backdrop for us, George. Appreciate it.